I didn't actually. I haven't had my eyes on silver, so I gave this a little bit of a pass. But yeah, it's not stopped going. Gold's actually had quite the corrective so far. It's been coming down. It's not come down too far, but we've still got about another 1.5% to go before it's shed most of the gains that we had from the weekend gap. Good afternoon, ladies and gentlemen, and welcome to this afternoon's Markets Report Breakdown session. Hope everybody's doing well today. Good afternoon to you, Braden. Good to see you, buddy. Good afternoon, Scotty D. Got H&C in the house, and good evening to you, Matthew, as well. Good to see you guys. Thanks for joining. Hey. All right. Well, hope everybody had a good weekend. Everybody have a good weekend. Good afternoon to everybody out there on YouTube as well. Good to see you guys. Hope you all had a good weekend out there as well. Obviously, I can't comment on to everyone, but just wishing you a good couple of days off. Good, thanks, says Scotty D. Good, very good, thanks, says Matthew. And Braden says, yeah, mate, and you. Yeah, it was all good, thanks. Very chilled. Yeah, very chilled out. I've had a problem with my car for a while, and I had the good news that the part had come all the way from Germany over to the north of England, and the part was being sent home to me this morning. So that was a nice bit of news to know that the car part is on its way. I know that will seem like a small deal, but it's actually been a nightmare of a process getting repaired, incredibly expensive. So I'm happy to be through the other side of that and getting the damn thing sorted out, because I do very much enjoy driving that car, and I've had no choice but the wagon for a while now, which is it's not been fun. It's not been entertaining at all. So yeah, that's pretty much where I'm at. In terms of what's been going on over the weekend, we've had more of a case of risk off in the markets. Got to the charts this morning, and gold was up over 2.5%. We had silver at us actually saying that silver's at 5.34% up so far. Jeez. I didn't actually. I haven't had my eyes on silver, so I gave this a little bit of a pass. But yeah, it's not stopped going. Gold's actually had quite the corrective so far. It's been coming down. It's not come down too far, but we've still got about another 1.5% to go before it's shed most of the gains that we had from the weekend gap. But still, I mean, let's be fair. I mean, we topped out at post 510, didn't we? What, 511? Yeah. So incredible growth still going into gold, and gold will just continue trading higher. At this point, we need to see our correctives for the break, close, retest continuations, as we always do. And as gold, unfortunately, does not often provide, but we need to stick to those rules. And we you certainly won't catch me trading longs in gold without the necessary full retest of a point of liquidity first. It just can't happen. It just can't happen, guys. So yeah, we got to wait for those. We got to wait for those correctives to come off. I was thinking actually initially that we may see a bit of a gap down actually over the weekend with all the U-turns on tariffs, but as it happens, there's been a couple of U-turns here and there, but we've actually had tariff increases elsewhere, which has just created even more of a safe haven flow into gold. We've got 100% tariffs on Canada as a result of ego, and we've also I think the pressure's being laid on in France as well, and that's as a result of a few things now as it's coming to light. There's more more bits and pieces of information being dropped down every single day as that develops. And then, of course, we've got the Chagos deal as well, UK, which is sort of definitely not been the first nation, but we actually have a prime minister over here that stood up, that stood his ground on something. So I think that's worth celebrating, if nothing else is. And is actually put his foot down so far anyway with Trump, and so there's more tariffs coming our way as a result of that. It's just a bunch of posturing at the end of the day, isn't it? You know, it's just a massive bunch of posturing by governments. It's almost like they've forgotten that they are in control of millions of lives and their financial ability to be able to afford a relatively decent way of living. You know, and stuff like that. It's kind of all been put by the wayside. Just to, you know, I've got to say this just because I've got to say it. I don't know any other way to say it at the moment in the mood I'm in. But I would say it's just turned into a massive dick swinging competition. You know, it really has. Who's got the biggest? That's just what it feels like between global politics. These people that are in control of millions of lives. It's a joke, isn't it? It's a complete and utter joke. So, yeah, it's a bit of a shame. But there are some really good things as well. Obviously, the main good thing is that Australia has led the way in banning social media for under 16s, which I think it should be 18, really. But look, that's a massive deal. And governments around the world are following suit. We don't have a great deal of governments doing it, but we do have some of the big ones. We've got the UK following suit. We've got France following suit. And Australia's really led the charge on that. So bravo to the Aussie government, I would say, on that front, because I think that's incredibly important. And yeah, even though it's not directly affluent over to our financial markets, it's an important thing to, I suppose, you know, be positive about in these times where there's not a great deal to be positive about. if you haven't got kids, then you might not be so bothered. But if you do have children, then it's a big bloody deal. Good afternoon to you, Corriton. Good to see you, buddy. Right, so that's basically what I've got to say about that. We don't have any other major notable call-outs. Even natural gas is off to a little bit of a slow start this week. Bear with me, guys, just 2 secs. Just going to take my jumper off. Sorry, the office is rather warm at the moment. So, yeah, no real other major notable call-outs at this time. Natural gas off to a slow start. Stock indices in the US are pretty timid. Our European markets this morning, I mean, daily percent change, as you'll see soon enough, the daily percent change on them is absolutely nil. We haven't seen anything but range-bound market price action. I'm pretty glad, actually, that I didn't bother putting out a series of trading opportunities from the European Open this morning. I do feel at this moment in time like it would have been a complete waste of opportunity, really. So that's all okay. The rest of the FX space as well, of course, we will have a little bit of a look, even though we're going to focus predominantly on those US markets this afternoon. But the FX space, apart from the yen instruments, which we'll come to in a moment, of course, are unchanged. Daily percent change average is 0.2. So we've not seen any movement out of most of the FX instruments. We do have the Japanese yen, however, which is forced a lot of the crosses down. So we've had another major push in the Japanese yen. We've got a number of reasons for this. We've got a lot of economic reasoning behind it. We've got the Japanese government bond market, which is absolutely collapsing at the moment after being at record highs. And we also have some central bank intervention, but we also have a lot of this safe haven capital, again, fleeing out of the United States at this time, and a lot of bids in the Japanese yen. And as you may see as well, the Swiss coming into play soon enough, which has actually been toppling a lot of its crosses, unless the counterpart currency is doing well in itself. I mean, even the Aussie Swiss at the moment saw a pretty big down week last week. I think finishing the week from the high to the low at around minus 1.4% down. So a lot of those safe haven currencies sort of getting inflated at the moment as a result of what's happening. The dollar index at this stage is trading at 97.25 as well. We're currently seeing a very, very big sell-off in the dollar index. And this, I mean, it doesn't look that great. I mean, honestly, if the dollar breaks through the current floor, it's the lowest point in which the dollar would have been trading since 2022. And then before the 2022 low, then the next point down is at 93, which is in 2021. So we're reaching some pretty significant levels in this index at the moment. Really significant. I mean, things like the Euro USD, for example, which is currently trading at 118.50. We're probably going to be looking at Euro USD highs at around 123.80 and 125. Prices in which we haven't seen since 2018, 2019. So we're really going back a few years now. I mean, 2018, I would have been doing the live events for Forex Signals back then, which is where we kind of, some of you guys in this room, Braden, looking at you, mate, and a little bit after that, Matthew as well. It's where we kind of started our journey together. So we're really taking a few big swings now with that DXY and where it's headed. Which means, of course, excuse me, there's definitely going to be some money on the cards for us. Absolutely 100%. I still am holding my tune that 2026, although is going to be filled probably with a lot of turbulent times and possibly some pretty rough times as well out there, that the markets are going to be full of opportunity this year, so long as we are ready and prepared for it. Now, that's a good segue, ready and prepared, into this week's market report, of course. So, having a look over at what we've got going on this week, I've personally chosen the US 30 Dow, the pound against the Australian dollar, natural gas, and gold for the 4 top trading assets of the week. The Dow Jones, even though it is looking a little bit scrappy at where it's currently trading, I am expecting there to be a nice range continuation with this one as uncertainty continues to control the theme in our US markets. Either that's going to be coming around from a rejection of the liquidity point at 48.75, or it may well be the ascending level rallying up through the bottom there. But nevertheless, I am looking for a continuation of the range that we've seen in quite a few waves from now. Last week's US 30 Dow market report trade ideas were actually really good. Don't know if anyone noticed, but they were. They all came out nicely. And I think a continuation of that is certainly going to be on the cards this week. So a continuation back up to the previous highs, either from 48.75 or down the low from the ascending level, which would be approximately 48.50. Looking over into the FX pair this week, the pound against the Oz has officially broken through a major institutional low here. Really big point of liquidity. And it dropped through it very dramatically in dramatic style. A couple of nice big daily bars. We are in pullback territory at the moment, and I would expect the continuation right the way back to that point of liquidity before we get going from there. Alternatively, this could be seen as potentially a weekly fake out if the market does indeed break back above the 2.0 level. But at that point in time, we're going to be sort of well ahead of it and ready to take the attack wherever that's wherever necessary. But I think a nice buyback opportunity. I think we'll be able to make a bit of money between where the market's trading at the moment and that point of liquidity above. The pound against the Oz at this moment in time is currently trading at 97.45. It has actually come down a little bit from the Friday candle, but I think it stalls. I don't think it goes any lower than the current low of 196.77, and I think it will bounce back. It's such a big point of liquidity, and just for perspective, it's actually held price action back since October of last year. So it's been months now where the market's been repeatedly beaten back every time it attempts to break through the floor at 199.50. So I think it definitely deserves that kind of respect that we anticipate here with the commercial orders piling in down here. Probably a lot of commercial shorts at 199.50. And, ultimately seeing that price action come back there to collect those orders. So that's what I'd be saying about that one. So keep your eyes peeled. We'll look at loading up some trade ideas on this one tomorrow. Now, moving down to natural gas, we have the potential for the break, close, retest, and continuation of the upper point of liquidity. Natural gas at the moment is really coming down quite harshly, actually. The weekend gap has been closed, which is fine. We did get a little bit of a breakout on the open at 550 high, but it's currently trading at 523. So we are trading now basically back inside the original two trading margins. The first where we took a long, and the second where we actually the second was a long as well, wasn't it? We missed out the first half of the trade, but yeah, the second was a long as well. So yeah, where we've taken both longs. So we may be in the runnings up here for a short back down to 460. But anyway, we'll have a look at that one in a moment, just to take a picture of it and show you guys. Well, actually, I don't even need to, do I? Yeah, ultimately, natural gas from this area here back down to that area there. I've already mapped it out for you all here. So yeah, we've come up here, we've come back down. We're basically trading where the price line is in this image. We could come all the way back down to this low and then continue trading higher, if that is indeed going to be the fake out that we believe it's going to be at this stage anyway. And then finally with gold, we are long, green and strong. The gains are very, very impressive. Just since being on the stream here this afternoon, silver's risen another 1.3%. It's now trading at 6.3%. And gold is currently trading at 1.8%, which was trading at 1.37 at the time of coming on. So, I mean, these are really firing off, guys, on all cylinders at the moment. Money is flowing in there faster than we can count it at the end of the day. So we do really want to try and get long as quickly as possible. And it is just about being completely plugged in, tuned into those price action pullbacks, getting ready for the orders and going from that point on. Otherwise, the runaway train's left us in the dust quite a few times now. I'm not proud to admit it. I would have liked to have been better. But I mean, even looking back in hindsight, sometimes I look back at the gold chart in hindsight and I just ask myself, where the hell would I have actually realistically got in there especially considering we're not up overnight? Because a lot of the beginnings of these price action pullbacks take place. I'm just looking back on the gold chart at the moment. I mean, it was 8 o'clock in the evening, the last major one, and then 2 o'clock in the morning, which was around the second opportunity that we had to trade. So, that's not going to work. The last major price action pullback before that, it was ranging for a while, so there would have been ample opportunity to get in there, to be honest with you. But we didn't, for whatever reason, probably because it was coming up to Friday, and I didn't want to risk it gapping down and us being, sort of left in the lurch there. The market did come up anyway after the weekend, so we couldn't have even taken that trade. That was just, if we were gambling, if we were hoping and praying, we could have and possibly taken on a couple of wins, but it doesn't make good sense from a risk management perspective. And the next major price action pullback that took place before that on Thursday, the 8th of January, we got the break of structure in the afternoon. That one would have been a feasible entry point. So maybe Thursday last week, which is an opportunity missed. But it's just, even since then, it's rallied so significantly. I mean, if you look at the daily time frame, it looks like a bit of a joke chart. It looks like a little bit of a chart that you post out, that you see posted out sometimes. It's just a bit of a meme chart, to be honest with you. It's insane. It's absolutely insane looking at gold. I know you all have access to the same chart as I do, but when you look at something that looks like this, hang on a minute. Upload file. Bang. Yeah, you just feast your eyes on that damn thing for a bit. It really puts things into perspective of just how messed up things are right now. If you see gold rallying from 32 to 51 in the space of 4 to 5 months. And I mean, honestly, that's only half the move. that bit that I sent you right there, that's literally half the move. We had another beautiful move before that. I mean, Scotty D called it at the beginning of the session as well about silver. Let me zoom out the silver. I mean, silver honestly looks just as freakish. Oh, yes. Yeah, thanks, Scotty D. You already posted it out. Yeah, exactly. I mean, bearing in mind here, we're discussing safe haven commodities. We're discussing precious metals, very old trading assets. These charts at the moment, they look like cryptocurrencies. These look like infant assets. Things that have been in fluctuation for a couple of years or something. We see a bunch of excited hedge fund boys starting to buy it up. And so therefore, because it's so illiquid, you get these massive price rallies. But these markets are old. They have had $billions, trillions of dollars invested in them for many, many, many years. And we are still seeing those sizable moves in it. if you think about it for a moment, it really does paint the picture of the state of the world when you see price fluctuations in ancient safe haven commodities like this. It really, really does. I mean, we've never seen things like this before. I mean, look at Scotty D's chart, which is on the weekly time frame, weeks long. We are going back 1, 2, 3, 4, 5, 6, 7 years, 8 years in that bit of price action alone. There's never been anything like that before. I'm going to actually have a look just out of curiosity. Yeah, I mean, I don't even have the dinosaur data feeds anymore. I have that on TWS now. But I mean, it goes off to the edge of the screen. So 17, 18, 19, 20, 21, 22, 23, 24, 25, 26. And all of a sudden, at the end of 25 and the beginning of 26, yeah, we're just smoking everything else that we've ever seen. Now, scarily enough, if you see, oh, there you go. Look, yeah. Thank you, Scotty D, for posting up these things. Yeah. So I was just about to say, if you go back far enough, you will see similarities in what's happened before in these times where we've seen these incredible buying processes take place. There has either been major world conflict or there has been major world catastrophic economic breakdowns and shutdowns. That's the only time you see buying pressure like this coming into play with those ancient commodities like this, these ancient safe haven commodities. What we're looking at here in Scotty D's example is we are looking at one back in the 1980s, the last time there was a major conflict and world economic shutdown as well. The one in 2008, 2009, everybody remembers that one. It probably affected most of us in the room, regardless of us even thinking about it. I know, Scotty D, you might have been a bit young at that point in time, but your family would have been affected by it. We all would have had someone who was negatively affected by what was going on then. And now what we're looking at is we're looking at those two like minor blips in comparison to the one that we've recently seen. The one at the 2008, 2009 financial crisis and that peaked to 2011. Well, the peak price at 2011 was 50 an ounce. Okay, we're currently trading, according to Scotty D's chart there, at 109. More than double of that prior figure. So, I mean, man, it's crazy. It's crazy what's going on out there at the moment. It really is. Every single time, though, after whatever happens, there's the massive sell-off in the correction. So, regardless of us not being able to, handle the sheer volume that's taking place in these ancient commodities at the moment, we're certainly going to be able to short the hell out of them at some point in time. It won't be for a while yet, but but the day will come. The day will come, and then we'll be able to be proud of ourselves again. I'd say, taking the profits on the downside rather than the upside. Anyway, back to the MR then. So if we move down here, we got market challenges this week, of course. As most of you will know, it is Fed week for the United States. We've got the Fed interest rate decision that's coming out on Wednesday. Is it? I wanted to say Wednesday. No, I'm wrong. Hang on a minute. No, I'm right. Sorry, I'm right. Yeah, it is Wednesday. It's Wednesday evening, 7 p.m. as it usually is. We've got the BOC interest rate decision happening earlier on in the day at 2:45 as well. Wednesday is potentially going to be difficult. You know what it's like for me in the evening, especially with a family and got the kiddies and that running around. However, I am going to try and make it. Some of these Fed decisions I have recently done in the evenings, and I think sometimes it's worthwhile. I think it's especially in times like this where it's important to really take note of what's happening. And the Fed events at the moment are more important than ever before, especially in our trading lifetimes. So I think it is very important to cover, regardless of not if we, ultimately, come out with any kind of benefit from it. So I'm going to try my best to be here for it. It may be a reduced session. It might be me coming on a little bit late for it or something. I don't know what it looks like yet, but I am going to try my best to do something for it. So please stay tuned for that one as well. And as we go down into the SSV this week, no, again, notable call outs apart from the fact that gold's at 56% bought. Natural gas has really wild swings of its long versus short liquidity. So looking at something like 58.43 on the SSV isn't actually, it's not always that, I don't believe that there's going to be some earth-shattering move to the upside just by seeing this at this stage. If I saw that kind of figure in the pound against the odd, I'd be putting a shed on it, put it that way. But we don't, unfortunately. And with natural gas and how volatile it is, especially with the current situation, geopolitical situations going on behind the scenes there's going to be a lot of fluctuations with that one constantly. Now, moving down into the economic and order book impact report, of course, this week, BOC, Fed, and US PPI are the only things that you should be paying attention to. The BOC interest rate decision is actually registering as a 6 out of 10, which I was a little bit surprised at. But apparently it is going to send a little bit of a shockwave across Canadian dollar trading assets. You may see a bit of a shockwave in UK Brent, US crude as well as a result of that. The big one, of course, the Fed interest rate decision is registering as a 10 out of 10. So do expect the fireworks display on for that one this week. And then we've got US PPI, which is staggered behind it, a 4 out of 10, which I'm not surprised at all. That's in line with what I would expect from a US PPI read. Now, moving on down, we've got no major changes in money flow trends at the moment. Very, very stable, just like the economic data that we're receiving as well. Really, it's just very, very stable, and it should be, because in uncertainty, there is sometimes stability where the markets don't know what to do, and so they keep themselves out, or they keep themselves locked down with what they've already got in. There's minor rebalancing. They try and keep themselves exposed on either side of the market to prepare for whatever may come, and then they can scale into their positions from that median point. So you shouldn't really historically see any major swing in the numbers there with buy side or sell side liquidity from a commercial point of view. Now, in terms of the equities in focus this week, we have got a bunch of new ones: ESTC, GNRC, KNSL, and TDOC. A couple of 70s actually, so that's quite significantly in the buy side territory. So certainly worth checking those ones out. ESTC, which is the lowest of the four, is a brand new one to this market report. We've never had them before, but they do seem like a really interesting product and company, and they have got some good financials. So please do feel free to go and check those out as well. The one of the week for everyone is Veradigm, and Veradigm sits at the intersection of healthcare IT, data monetization, and AI-driven analytics. Of course it is. And they've got a few bits and pieces in the pipeline. It's kind of a coin toss at the moment, whether or not those things are going to be implemented in real time, or if it's their ideas that have been posted and they're not actually going to do anything with them. But it could be the opportunity where you stick 50 quid in and you might get a really significant return. Worst case scenario, you blow 50 quid. And I'm being straight with you guys, okay? This is not, I am not Mr. Financial Advisor offering you a 20x return in a couple of weeks from a next to nothing investment. If you at the end of the day, guys, if you fancy having a punt on it, then it could be a really good return. It could well be. It might be a bag of rubbish, but I think it has the telltale signs of something that could have a steep and significant hike very quickly, and then sell off after the excitement runs out. And by which case we could be done and exited with our pennies in the bank. Now, thinking about institutional buying interest by sector, we've got healthcare IT leading the flow at 2.8 bills. Energy at 2.1, fintech down at 1.9, and data at 1.6, which I am a little bit surprised to see defense not in there again. Probably will be coming back next week, but for now, that's where we are. Okay, now the most important thing of the day, the disclaimer. The information provided in this market analysis report is for informational and educational purposes only and should not be considered as financial advice or a recommendation to trade or invest. Trading in financial markets involves significant risk and may not be suitable for all investors. Please feel free to read the whole disclaimer at your own leisure. You could go and check out our T's and C's at theutc.com. Scroll right down to the bottom of the page and they are all listed there for you. Okay, right. Let's move on from there then and have a flash over to our US indices this afternoon to see what we've got going on. As I said, we're not really going to waste our time with the rest of the markets. We'll be building in some trading assets for the portfolio tomorrow. But for today, we are going to stick to our guns and see what we can get out of those US indices for the afternoon session. Right. Unless, obviously, we'll just have a quick look at the yen stuff, actually. Just a quick one. I know I said I would. So, Japanese yen powering up against most other currencies at the moment. We've had a nice gap down and a continuation down in the yen crosses. So, CAD yen, for example, is down at 1.08%. Shaved off the top. It's broken through some structural points in here as well. If you go up to the 4-hour time frame, you'll be able to make clearer sense of this. I mean, these aren't small moves. These are quite significant, to be fair. The euro yen, really significant move off the top of that one. We are still coming into some points of liquidity here, but the major floors have been broken. For example, the euro yen's major floor is about there. So if we get a successful retest continuation, I wouldn't be too concerned about this one. I'd be looking for the next point of call like here, which means that there's a fair margin from around 181 down to 178. That's a few hundred pips there, guys. So quite a substantial piece of the pie, so to speak. New Zealand yen's quite resilient at the moment, but still has been quite the sell-off regardless of that. At the moment, still room. I think if we break through the structure at 91.55, you've got a free run down to 90. So you're looking at about 100 pips down, 150 pips below where it's currently trading. USD yen, of course, look at the size of that one, team. That's a beast. Major floor in this one, anchor point, was there. We've got the break close and the retest, which has just taken place. The next major point, ignore this high. This is a fake out from fundamentals. So the next major structural high is about there, or low, should I say. And from there down to there, I mean, we're looking at, 450? Maybe 450 pip move down below. So that's a sizable margin that we can certainly be looking to take some intraday trades along there. Or alternatively, we could just take a couple of long termers. But you're going to make some real money by taking a lot of intraday, or you're looking at scaling in opportunities where you're leveraging your market risk to increase your position size, but keeping things flat the whole way through. I know that might not make sense to everyone, but some of you it certainly will, and that is an option. So we can kind of structure that out as we see fit as we move forward. Excuse me. Rightio. Up to our US indices then. Looks like the Dow Jones already kind of got on its way up to our target. I'm not too bothered about that fact because we can just look to take the rejection from the highs. It is good to see that it's already done quite well though. If we go back in time here, look at areas like this, for example. Okay, so that's quite a nice structural point in there. It can certainly be used as an entry. And then we look at the next one above. That's going to be about there, isn't it? So then that could become our long trading margin for the day. It would be nice to thin this out a little bit. I think we could. Yeah, make it like that. Make it a little bit more break of structure thickness. Bear with me. Bless me. Whew. So yeah, a little bit more in the break of structure format. I don't mind that trading opportunity at all. So if we go down to 1 minute time frame, look at the size of the margin. The margin's very good. We have a TRF situated at around the median at 49,255. Definitely not a reason not to consider getting into that market though. So I think if we look for a long break of structure, target profit, and your stop loss at around maybe a 1 to 2.87, 1 to 2.8, that would be really nice for the long this afternoon. And I think we can, for the most part, we're able to stay down here on the 1 minute time frame. I think for the short, we could just look for a short down to say for this low here. We've got a median on the other side of the market as well. That's at around 49.14. The break of structure for the short, for the entry, would be here, and that would be a rejection of the point that we've listed above. So then we would have them push up into liquidity, the rejection, and then the short from there. Entry, target, and the stop loss for a 1 to 3.27, which is a very nice sizable trade. But it only works so long as we have the rejection of that area there. Okay, so not too bad going on that Dow. Looking at the NAS 100, let's go up to our anchor chart, 15-minute time frame. We can see we're trading at the highs at the moment. This is the structural point. Multiple rejection period along here. This tells us one thing: commercial banks are interested. So if we come up to this level, the chances of a rejection of this point in time is significantly increased rather than anywhere else. So we go back down to the 1 minute time frame. We look for the point in which we would like to enter a trade. This one and this one, it's just a little bit too aggressive. I want to see the market clear the grey. So then we're looking back in time at this area in here. Going to pull that across. And as I can see, we've got inflection point 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Cut a long story short, it's a used area. So then I'd be looking for the entry to be below this point in time. Target profit for this one. Do I get greedy and look for the 25.46, or do I look for something a little bit higher up, a little bit more realistic, less optimistic? That's what I want. That's especially what I want on a Monday. That is the kind of theme that I'm looking for on a continuous level, whilst the markets are in the state they are. So I think the best point of call is realism. We're going to come down here, possibly look at maybe areas like this, maybe that one there. We've got a nice floor in the market in this area as well. That certainly looks quite realistic, doesn't it? Market's been down this level over and over again. It is above the significant low here. It's above the significant high here. These are the 3 points in which you'd be thinking a market may come back down to eventually. This area in here is major liquidity in cash. Right, so all the money in the market is in there. So the market has no problem eventually reaching this area, but it's just a matter of how long it's going to take it. So for me, this area provides trading margin and availability, which is still significant, whilst also increasing the chances of success. Entry, target profit down at the lows. For this one, I mean, it's a sizable trade, so I'm going to bring that stop loss up. I want the stop loss above this high in here. So then the stop loss for me is going to be pretty much just about there for a 1 to 2.75. Slightly more on the intraday scale, excuse me, than a day trading opportunity, but it is what it is. I like that trade. And now for a NAS 100 long. I mean, there is options. There is options because we certainly could look at the high. That's at around 25.72. Significant trading margin in between. You've got the breaker structure point, which is about there. But for me, I feel like this comes into the realm of optimism again. And I don't like optimism right now. I'm unoptimistic. So the market's already had a good rally so far from around 1:30 the time we got on stream. It's rallied up here. From the high of the day, we're already 0.2% above. So from where the market opened up, and we had a pretty significant sell-off after the market opened initially anyway. So its recovery has been sizable. The market rallies up to this area, then we have to enter the trade to get into the market back up to 25.72. Things are becoming less and less and less optimistic the more I speak. So even though that is an absolutely fine trading opportunity as far as the technicals suggest, it has to be taken with caution. When I say something needs to be taken with caution, what I really mean is keep the risk light and keep the risk reward ratio down. One or the other. You don't have to use both, but just use one or the other. I'm going to leave that up to you. You are the masters of your own fates. For the most part, for the most part in these markets, so you can take a decision on what you would like to do, whether that's going to be a more relaxed stop loss, or alternatively, the higher stop loss, and you're going to decrease your risk size. But something needs to happen. So just please be aware of that. And the space in the middle is a nice big wide no man's land. Download. As for the S&P 500 at the moment, I feel it is unnecessary to have that in amongst everything else. Plus the fact of where the market's trading at the moment and due to the previous points of inflection, it doesn't make sense going short it. You might be able to get yourself into a long back up to the highs there. But why would you bother? Because it's the exact same trade as the NAS 100. It's identical to it. All right. And that's about where we are, guys. That's about, I think that's about where we are. I think I've covered all the bases. So, do you have any questions for me? No for you, Scotty D? All good, Matthew? Yeah. All right, guys. Great stuff. Well, let's pray for the best then. Let's hope we get a good afternoon today. It is a Monday, so please don't go and rush the process. Be patient with yourselves. Be patient with the markets. Sometimes recently, Mondays have actually been very, very, very good. So it could well be. It could well be. But nevertheless, let's just try and be patient. Remain focused. Let the market bring the opportunities to you. Don't force it. Give it the room it needs to breathe and flex and move as it does. Okay? And aside from that, if you need me, I'm here. Open door policy as always. Let me know how you get on. And let's see what we can do. All right, guys. So take care of yourselves. I hope you enjoyed the session today. And I look forward to catching up with you again soon. See you then. Cheers, guys.